Evening, guys. So today, I'm sorry about the dogs that are barking in the background. So today we're gonna talk about dojis. Dojis are candlesticks that they have a meaning. They are the for me, they're the most important candlesticks in trading. You understand? With dojis, I can say I'm gonna make a couple of examples with dojis. It's like this, it's like this, it's like this. I'm gonna draw a couple of examples. So okay, let me fix this first and make it straight. So, these are different types of dojis, guys. A doji is a candlestick that first of all, let me explain a candlestick. Let me do this first. This is a candlestick, right? I'm not gonna say it's bearish or bullish or whatever, but with a candlestick traces time. It shows you, if you're in the 1 minute time frame, that means every candlestick takes 1 minute to complete. If you're in the 5 minutes time frame, that means every candlestick will take 5 minutes to complete. You understand? If you're in the 15 minutes, 1 hour, it will take that time to complete. You understand? So what happens in with candlesticks is, right now, let's say this is bullish, this is green, and it's going up. If this is a bullish candlestick, what it means is the previous candlestick, I'm gonna draw a candlestick right here. That means for this candlestick to open there, I'm gonna explain right now, hold on. For that candlestick to open there, here, for this candlestick to open right here, and it means the previous candlestick has to close here. So at, let's say this is the 1 hour time frame, and this happened at 5 p.m. At 5 p.m. the candlestick that started at 4 closes for the hour, and a new candlestick starts. So when this one closes here, the next one has to open here. You understand? And when the hour ends, that candlestick has to close probably here, and then another one will open here and create, and then and start another candle for that hour or that time frame. So the most important part is to understand this. This is it's called a shadow or a wick. It means not a wick like as in a wick. It's a spike. It shows where the candlestick has been, but did not close above that area or around that area. It's been there, but you understand, this is the close. This is the close of the candlestick, and this is where it opened if it's bullish. And then this week, that means that at some point the candlestick was that long, and it came back and closed right here. You understand? So now explaining dojis, what makes dojis very important. With dojis, for them to be this important is, dojis for me is what I use as entries. If you are trading, let's say you have a wedge pattern or a channel right here, and the market was going this way, then it went down, and then it went up, and it went down, and went down, and so on. These areas here where you enter here, you understand, so these areas, that's where you find your entries, right? So for you to enter, you have to have a doji, which is a candlestick like this. Why? Reason being, if the market gets to a trend line, I'm gonna make a very simple example. If a market gets to a trend line, let's exclude these candlesticks right here. Forget about these for now. Focus on this one. So if you have the market right now, I'll just do it like this. If you have a trend line right now and there's a candlestick against that trend line right now, let me do it with a different color. Let's say the market is this is a candlestick. Let me use red or green, and then you have a candlestick rising, and this candlestick gets out of the trend line and turns around here and then comes back and closes here. After this, you will have, because the candlestick went all the way up and then came back down, you will have this. Since the candle came all the way up there, so you will have this against the trend line. This is your sign to sell. This is your signal. You understand? Because it means the candlestick went all the way up here and then spiked all the way down before that time, and then that means it got rejected, so it closed below the trend line. If it closes below the trend line, this means now you have a rejection. All these candlesticks that I drew here, these type of candlesticks, all of them, they represent rejection. It means if you have a trend line around here like this, and all of these candles, they represent rejection. The market is struggling to go above that area. If it's upside down, then the market is struggling to go below that area. You understand? Therefore, you as a trader have to find your entry around this area. So now I'm gonna go to the chart. I'm gonna use USD CAD. Some candlesticks are not exactly like this, but you must look at the candlesticks that are around the entries. You know, let me do this from here. I'm gonna draw a trend line all the way from here to here. People always ask me this question about how do you know if you should enter or not, and I think that's where people struggle the most. So now let's look at these areas. I'm gonna focus on these areas. Look at this candlestick right here. Look at these candlesticks around this area. These candlesticks. You see all those candlesticks are busy spiking against the trend line, and then they fail to break. You understand? Let's look at these candlesticks on the other side, like on the lower side. Let's focus. Oh, sorry, I drew the trend line wrong, so I have to fix it. Or something like this. Yes. So now you can see there's a rejection here, but let's focus on this one. Look what happened when the market got here. It spiked all the way down. It went all the way down and then came back to close above that trend line. Then it went, played around, then spiked again and closed above the trend. That's your sign that you should sell. Let's look at what happened here. Here was a sign that you should sell. It spiked, went all the way up, and then after it spiked through the trend line, it went all the way up and then closed below a couple of times and gave people the sign that you should sell. So if you're a seller and you place your trade right here and you say sell, where does your stop loss go? It goes above that shadow, like that's your stop loss. And where's your take profit? the other side, your profit, take profit is all the way down here. So now if you trading, you'll be risking, look at the number in between, those are the pips. You'll be risking somewhere around, you'll be making about 10,000 plus pips or 12,000 and risking these small pips. And I also look at the this is the daily time frame, so I also look at entry on the 15 minutes time frame so that my stop loss can be even smaller. You know, I don't place big stop losses. You understand? My stop loss would be something like this, and then my take profit will be huge. So let's look at this. Let's say right now you're a trader and the market obviously gave you a sign, okay, there's a rejection and now you should be selling. But let's look at this candlestick. Let's say you're waiting to see what's going to happen, and then the market gives you this candlestick, and it closes here. That's a sign that the trend is, the cycle is over. It's not going to go back and close below the trend line, or it's over. From now you're looking for a buy. So since the market is here right now on USD CAD, what do you see? What I see is this. You draw a trend line from here to here, and you can see you have a rejection here. You have a rejection, which is a second response, and then you have another rejection here, and then you will have another rejection probably somewhere here. So now what are you going to do? You're going to wait for the market to react to that, and then on the lower side you have this. So now this is also a channel. So what's going to happen now? The market is going to come all the way up here, and you're going to watch if the candle closes, if it spikes and then comes back and closes below. That's your entry. You understand? That's your entry, and your take profit would be somewhere here. You understand? And it would be great if you find another entry here. Another way to find an entry here is if you draw a trend line from here and through here, you can see that this is a second response and this would be a third response. So meaning this would probably come all the way here, and now you'll be trading this because you can see, if you put a trend line here, you can see that this area is the structure here. I mean, there's going to be a third response from this. You understand? And it's also responding to the higher time frame, the daily. You understand? So now what you're going to do as a trader is you would sell this USD CAD, and after selling, wait for it to come all the way down here and catch this 3,100 pips, and after that you will buy it again and see what happens. You can have your take profit here, or wait to see what happens when it gets there. If it gets here and it goes above, then what's gonna happen? If you wait, if it goes up and closes below, you close that trade. But if it goes above, what's gonna happen is this, obviously, and then now it's gonna come back and find support and bounce, and then you can set your take profit higher. You understand? You can set your take profit higher. That's it. It's that simple, guys. Like, it's that simple. You can set your take profit all the way up here because of this structure, and you can set your take profit all the way up here if you want to. You understand? Depending on what you want, but it's gonna take forever to get there, so you can set a different take profit. So yeah, if you have any questions about candlesticks or anything, you can feel free to ask me, guys. I gave you an opportunity to ask as many questions as you could, but not a lot of people asked, so I hope you answered.